Vlad the stock impaler.
Hey guys, thanks for inviting me up. It's good to hang with all of you.
All right, so it sounds like this organization, calls you up and they basically have a gun to your head, either hand over this money or else. And so, because I mean, like basically, what people are wondering is like, did you sell your clients down the river, or did you have no choice? And if you had no choice, that's understandable. But then, we got to find out why you had no choice, and who are these people that are saying you have no choice?
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So last night, worlds collided. Elon Musk, CEO of Tesla and SpaceX, had the opportunity to grill Robinhood CEO Vlad about what exactly went down last week when Robinhood, without any consent or feedback from users, decided to restrict trading on certain securities, including, of course, the meme stock of the century, GameStop. Ordinarily, I'd add my commentary and thoughts throughout this video, but I know there'll be a lot of people watching who aren't regular subscribers of the channel and don't give a fuck about my opinion. So what I'll do instead this time is add my commentary at the end of the video. So let's get into it. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it. And as you guys watch this, pay extra special attention to Elon's responses, especially the one-word variety such as okay and right. I think what Elon doesn't say says even more than what he does.
Vlad the stock impaler.
Hey guys, thanks for inviting me up. It's good to hang with all of you.
All right, Vlad, what really happened? Give us the inside scoop.
All right, well, I was actually hoping that you would invite me up for the Fermi paradox part because this has been a very surreal weekend and week for me. One of the really great things is all the people coming out of the woodwork to offer support for the company, offer, advice. So I got introduced today, and actually I should say I just randomly downloaded Clubhouse a couple of days ago just to see what it was all about. So this is my first time literally using the app. But yeah, I got introduced to your friend Antonio, Elon, who had some good advice for me, and then introduced me to you. You had some great advice. And then I figured, I heard about this Clubhouse and this has got to be part of the simulation. So I just thought, why not? So here I am. So I'm actually an adherent to the simulation hypothesis.
All right. Well, spill the beans, man. What happened last week? Why do you stop people? Why couldn't people buy the GameStop shares? The people demand an answer, and they want to know the details and the truth.
Yep. Okay, so let me start by giving a little bit of background. So I'm the chief executive of Robinhood. Robinhood's actually a.
Just go on.
I'll go through this quickly. Don't worry. This is important. It's actually a couple of companies. So there's an introducing broker dealer called Robinhood Financial, and that basically is the app that you know and love. It processes trades. You're a customer of Robinhood Financial. Then there's a clearing broker dealer, Robinhood Securities, that clears and settles the trades. And then we have Robinhood Crypto, which is our crypto business. All of these are kind of different entities that are differently operated. So basically Wednesday of last week, we just had, unprecedented volume, unprecedented load on the system. A lot of these, so-called meme stocks were, going viral on social media, and people were joining Robinhood, and there was a lot of net buy activity on them, as you guys all know. And Robinhood at this time, I think, was number one on the iOS App Store. And pretty close, if not number one, on Google Play as well. So just unprecedented activity. And so Thursday morning, right? So I'm sleeping, but at 3:30 a.m. Pacific, our operations team receives a file from the NSCC, which is the National Securities Clearing Corporation. So basically, as a broker, as a clearing broker, and this is where Robinhood Securities comes in, we have to put up money to the NSCC based on some factors, including things like the volatility of the trading activity, concentration into certain securities, and this is the equities business. So it's based on stock trading and not options trading or anything else. So they gave us a file with a deposit, and the request was around $3 billion, which is, about an order of magnitude more than what it typically is, right? So
No. Why was that so high? Like, this seems like it sounds like this is an unprecedented increase in demand for capital. What formula did they use to calculate that?
Well, yeah, and just to give context, Robinhood up until that point has raised, a little bit around $2 billion in total venture capital up until now. So it's a big number. Like $3 billion is a large number, right? So basically the details are, we don't have the full details. It's a little bit of an opaque formula, but there's a component called the VAR of it, which is value at risk. And that's based on kind of some fairly quantitative things, although it's not fully transparent. So there are ways to reverse engineer it, but it's not kind of publicly shared. And then there's a special component, which is discretionary. So that kind of acts as a multiplier, and basically
discretionary meaning like it's just their opinion.
Yeah, it's a little bit. I mean, I'm sure there's definitely more than just their opinion, but basically,
well, I mean, I guess like
it's based on growth.
What everyone wants to know is like, did something maybe shady go down here? It's like, it seems weird that you'd get a sudden $10 billion demand.
$3 billion
in the morning. Sorry, how much?
Yeah, it was $3 billion US dollars.
$3 billion. Okay, $3 billion.
Yeah, around.
Just suddenly out of nowhere. And what percentage?
I wouldn't impute shadiness to it or anything like that. And actually, the NSCC was reasonable subsequent to this, and they worked with us to actually lower it. So it was unprecedented activity. I don't have the full context about what was going on in the NSCC to make these calculations, but yeah, essentially, it was a large number.
Holding you hostage right now?
No, I'm okay. Yeah. Thanks for asking. But anyway, so this was obviously nerve-wracking, and I actually was asleep at this point. The operations team was fielding this at 3:00, and then we got back, we put our heads together. Our chief operating officer basically said, "Look, let's call up the higher ups at the NSCC and kind of figure out what's going on. Maybe there's some way we can work with them." And basically, there was another call, and they lowered it to something like $1.4 billion from $3 billion. So, we were making some progress, right? And then, but it's still a high number. And then we basically proposed, well, let's explain how we plan to, let's explain how, we'll manage risk in these symbols throughout the day. We proposed marking these volatile stocks that were kind of driving the activity, position closing only. And then at about an hour before market open, so 5:30 or 5 in the morning, they came back and they said, okay, the charge is, or the deposit, 700 million, which we then deposited and paid promptly, and then everything was fine. So that essentially explains why we had to mark these symbols position closing only, and also why we knew this was a bad outcome for customers. Part of what's been really difficult is Robinhood stands for democratizing access to stocks, and
Yeah.
we want to give people the access. So that's been very, very challenging. But we had no choice in this case. We had to conform to our regulatory capital requirements, and so the team did what they could to make sure we were available for customers.
Who controls this organization, this clearinghouse?
It's a consortium. It's not quite a government agency. I don't really know the details of all of that.
Okay.
But and to be fair, like we were I think there was legitimate sort of turmoil in the markets. Like, these are unprecedented events with these meme stocks, and there was a lot of activity. So there probably is some amount of extra risk in the system that warrants higher requirements. So it's not entirely unreasonable. But we did operational processes to make sure that customers that had positions could sell their open positions, because obviously restricting someone, we got a lot of questions about, okay, you had to restrict buying, why didn't you also restrict selling? And the fact of the matter is, people get really pissed off if they're holding stock and they want to sell it and they can't, right? So I think that's categorically worse. So, and lots of other brokers, I think, were in the same situation. Robinhood was in the news, but you sort of heard this industry wide, right? Other brokers basically restricted the same exact activity.
All right, so it sounds like this organization, calls you up and they basically have a gun to your head: either hand over this money or else. And so, because basically what people are wondering is, like, did you sell your clients down the river, or did you have no choice? And if you had no choice, that's understandable. But then we got to find out why you had no choice, and who are these people that are saying you have no choice?
Yeah. I think that's fair. We have to comply with these requirements. Financial institutions have requirements. The formula behind these requirements, I think it would obviously be ideal if there was a little bit more transparency so we could plan better around that. But to be fair, we were able to open and serve our customers, and 24 hours later, our team raised over $1 billion in capital, so that when we did open, when we do open tomorrow morning, we'll be able to kind of relax the stringent position limits that we put on these securities on Friday.
Will there be any limits?
Well, I think there's always going to be some theoretical limit. Like, we don't have infinite capital, right? And on Friday there were limits. So there's always going to have to be some limit. I think the question is, will the limits be high enough to the point where, they won't impact, 99.9+% of customers. So, if someone were to deposit $100 billion and decide to trade in one stock like that, that wouldn't be possible,
All right. Well, I guess people really just want to know, if you had no choice, then you had no choice. It's gun to the head situation. And, then that's understandable. But then whoever put that gun to your head should, be willing to answer to the public. Yeah,
listen, and, I know there's processes. This is unprecedented times, and to be fair to those guys, they've been reasonable. So I think the one thing that is maybe not clear to people is Robinhood's a participant in the financial system, so we have to work with all of these counterparties. So we do get a lot of questions about, why do you work with market makers? Why do you work with clearing houses? Vertically integrating and getting, it's hard enough to build introducing and a clearing broker dealer. Not too many people have done that, but the financial system that allows customers to trade shares is sort of a complex web of multiple parties, and it's hard to. I think everyone says, "Oh, it could be better. It could be improved." It's just the necessity of trading equities in the U.S. that you have to do all these things.
I mean, to what degree are you beholden to Citadel? I mean, like basically, if Citadel's unhappy, then what happens?
Yeah, so that there was a rumor that Citadel or other market makers kind of pressured us into doing this, and that's just false, right? Market makers execute our trades. They execute trades of every broker dealer. This was a clearinghouse. This was a clearinghouse decision, and it was just based on the capital requirements. So, from our perspective, Citadel and other market makers weren't involved in that.
But wouldn't they have a strong say in who got put in charge of that organization, since it's an industry consortium, not a government consortium, or not a government regulatory agency?
I don't have any reason to believe that. I think that's just then you're getting into kind of the conspiracy theories a little bit. So I just have no reason to believe that that's the case,
Okay. All right. Well, I guess we'll see what happens with future actions. Hopefully that was insightful or at least a little bit entertaining. Are you not entertained?
Wow. So first of all, great questions there from Elon Musk. I mean, the guy, what can't he do? Better journalist than 99.9% of journalists. And I'm actually serious when I say that. This was the best interview I've heard with Vlad. The mainstream finance media, they did okay, but they didn't really ask the tough questions and push. And of course, oftentimes you'll see in a mainstream finance media interview, it's a little bit more confrontational, which generally speaking isn't a good strategy for getting information out of the person you're asking questions of. They get defensive, closed up, etc., feel like they're being attacked. Elon was very smart in how he asked these questions of Vlad. A little bit of humor there, very lighthearted, but he continued to press and ask the hard questions. However, I get the feeling, which of course is very unscientific, but it's all I've got to go on, that Elon Musk didn't seem satisfied with a number of those answers from Vlad there. Okay. Alright, so in a nutshell, Robinhood CEO is suggesting there that they were told they needed to come up with $3 billion, which is more money than the company's raised in its 7+ year history. So Robinhood effectively did have a financial gun to their head. They had absolutely no choice but to restrict trading on some of these stocks, or they would have been out of business. Putting aside the questions around the stress testing, risk management of the business itself for a moment, that's a whole separate issue. Where I am most concerned is Vlad and Robinhood's communication strategy of the matter. Rather than coming out publicly and saying, look guys, we literally would have been out of business if we didn't do this. We're so sorry. We know we fucked you over, but we literally had no choice. The alternative was Robinhood going bankrupt, you guys spending years trying to recover some of the value of your stocks that were held in our accounts, and you probably don't want that outcome. We're so sorry. We fucked up. We're remorseful. We really, really feel bad. We apologize. We'll try not to allow this happen again, but you must understand our hand was forced. The alternative was even worse than restricting trades on stocks like GameStop. Robinhood have had two colossal failures. First, the fact that they found themselves in this situation, and second, their terrible communication of what went wrong. I just want to ask you guys a question. Maybe somebody working inside Robinhood can forward this part of the video onto Vlad too. I think it might help. How many times did we hear Vlad use the words sorry, apologize, regret, remorse, mistake, error, failure? Not once. Maybe it's the fact that Robinhood's users are the product, not the customer. But in either case, I really feel that Vlad should have been very, very, very clear that Robinhood, 1, made a mistake, 2, are extremely sorry, 3, acknowledge that they hurt and damaged and frustrated their users, and 4, they will do everything within their power to ensure this never happens again. As for the potentially shady stuff that may or may not have gone down behind the scenes, I'm not going to jump to conclusions or make any accusations. However, I think it is worth you guys actually knowing how things work behind the scenes. Please assume that every word I say from this point forward in the video is completely wrong. Go verify everything. I could be wrong, I could have made a mistake, could have misheard, could have misread. I might also be high, I could even be sleep deprived. So who knows what might come out of my mouth. Please verify. But my understanding is that around 40% of Robinhood's revenue comes from a company called Citadel, who Robinhood sells their order flow to. Long story, I won't bore you with all the details. If you want to learn about that, get on Google. It's a long story. But if this is the case, if 40% approximately of Robinhood's revenue is coming from this company Citadel, would you be surprised to learn that Citadel may have been short GameStop stock to the tune of billions of dollars? Meaning that if Robinhood were to stop users purchasing GameStop stock, that would be highly beneficial to Citadel and probably prevent them from losing literally billions of dollars. Now, I'm not saying anything fishy went on here, but this is a useful piece of information to know, right? And there's more. Melvin Capital actually got a bailout from Citadel and another company to the tune of almost $3 billion a few days ago. I'm not sure if that capital was used to maintain a short position on GameStop stock. I'm not sure if it was used to, I don't know what went on there. But let's just think about this. Around 40% of Robinhood's revenue is coming from a company that's short GME stock. A different company, also short GME stock, is on the verge of bankruptcy, and then Citadel bails them out with multiple billions of dollars. And approximately the same time, Robinhood restricts users from purchasing GME stock, which in theory, if they were able to continue doing, would probably have caused enormous, catastrophic losses for both Citadel and Melvin Capital, who they bailed out. Allegedly, do your own research, please. Of course, nobody really knows what went down, except those behind closed doors, but I'd love to know your opinions in the comments. Do you think something fishy, something shady was occurring with Citadel being short GME stock, Robinhood restricting trading on GME stock, etc.? Or was it a total coincidence, like the fact that Wall Street bets disappeared for a day around the same time that trading was restricted on GME stock? What a coincidence. Man, can you imagine that? Wall Street bets goes down, Robinhood restricts access. Oh my gosh, it's just what a coincidence. But seriously though, let me know in the comments below, and I want your honest opinion. I'm not suggesting Robinhood did anything bad or there was anything shady happening whatsoever. I'm just curious with a consensus opinion. So let me know in the comments below. Do you think something shady went on, or is it just a total coincidence? And just some closing thoughts. Robinhood have screwed up massively in both getting into this situation and how they've communicated what went wrong, what went down, and what they've done to resolve things. Severe lack of empathy for the users who, again, aren't the actual customers, but still, at least have some empathy and consideration. Say you're sorry, apologize, be honest, transparent, and open. That is the best way to gain trust of your users. I hope Robinhood can recover from this and, more importantly, learn from this. But at the same time, I think this is a fascinating thing that's going down in the stock market. Vlad was right. This was unprecedented. We're seeing meme stocks, the rise of Wall Street bets, retail investors absolutely crushing some hedge funds as well. I think there's a little bit of a hangover from the 2008 global financial crisis. A lot of people felt a little bit of pain caused by some of the hedge funds. There's a lot of hate, a lot of emotional distress, etc. So I can understand the dynamic here. It's very complicated, but also at the same time quite interesting. And just one final thing, because I'm a troll and I just can't help myself. So yesterday on Twitter, I made a very obvious joke. Huge news. No, it's not. You just chucked a bit of hair on the logo. Our talented design team. You mean me, because it's a one-man show and regular viewers of the channel will be aware of that. Obvious joke. Unfortunately and embarrassingly, quite a few of you guys actually thought I was serious, and being the troll that I am, I decided to poke the bear a little bit more. So, introducing Solving the Money Problem Wall Street Bets meme logo merchandise. We got shirts, we got hoodies, we got mugs, and we got long sleeves. Get them while they last. These are ultra limited edition and will not last in the store very long. By the way, I'm actually serious, guys. If you'd like to pick up any of these designs, use the link in the description because I'll be deleting all of these products in a few days. I literally created this merch just to troll the people whose sarcasm detectors seem to be severely malfunctioning or entirely inactive. So if you're a bit of a troll, use the link in the description to pick up your Wall Street Bets meme logo merch while it lasts. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.